which we will work with the exponential moving average along with the ATR, and of course we will be using the AC2, the acceleration deceleration oscillator, for directional movements as well. But here it's not included in the title, as it's not means its role is not going to be prominent. More focus is going to remain on the EMA crossover and then the ATR. I hope you are well familiar with the EMA. It's simply the exponential moving average, in which more weightage is provided to the recent price action rather than allotting the equal weight to the moving average for all time periods. So that's why it's called exponential moving average. And the ATR is a average true range of the recent price action, where you will get the indication of the volatility, how volatile the markets have been compared to the prior time periods. Let's get started. Before that, there is a standard disclaimer. This is simply the tutorial session. There is no way any advice to trade or for any particular setup, and also no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the webinar session. And of course, even if you want to use these algorithms on your account, I would advise that you do the extensive trial runs for many months and even years, and also allow them to run in the demo account for a sufficient amount of time. With that, let's get started. First, we will consider the charts. What's our algorithm is going to be all about. So here, what we will do, we will simply try to focus on the EMA crossover. If suppose I think I should change the color of one of the EMA, so it will be easier to identify. Let's make it yellow, and we will increase the width as well. Now this orange one is 10 EMA and this blue is 20. For it also we will make width 2, so it's now more prominent. So here the setup is that we want the EMA 10 to be below the EMA 20 for a sell trade, and for a buy trade EMA 10 should be above the EMA 20, and these are going to be on the hourly time frame. So it's pretty simple. When the crossover is in the bullish territory, we will look for a buy trade, and when the crossover is in the bearish territory, we will look for the sell trade. And the ATR is going to be used for daily time frame. So we will be using the last 14 days average true range. So see here, you can notice that for last 14 days, this is the current day's ATR calculated using the data for last 14 days. Now it's at 87 pips, and if we compare it to the historical average, here you can simply notice that the ATR earlier used to be in the vicinity of 50 pips, and because of the higher volatility in recent days, now it has shot up to almost double the level, and now at 87 pips. We will be using the Euro USD for our development purpose. Of course, you can use any instrument, and just you have to do the instrument subscription to that effect, whichever instrument you want to use. Here also for Euro USD also the story is pretty similar. In recent week, the volatility has shot up, and because of that, the ATR, which was in 45, 46, 50 range, has now gone up to more than 70 pips, and this will help us to gauge the volatility and keep our orders using this prior knowledge of how volatile the recent past has been. And I think we will also need to plot this ATR, but AC2. but AC2 is nevertheless going to be used on hourly time frame, so it's okay. So this is it, and let me explain how we are going to build today's algorithm. So the first condition is that for a byte rate, the EMA should be above EMA 10 should be above EMA 20, and with that we will use the ATR. The ATR, if suppose now the daily ATR, as we saw just a while back, the ATR for daily time frame is 70 pips. So we want the trade to happen only if the recent 2 or 3 hours volatility is at least 0.3. uh, 0.3 means 30% of the daily average true range. If the volatility is more than 30% of the ATR, then only the trade will happen. What it will do when the price action is muted, when there is not much of a momentum, even in such scenarios, the if the signal is generated, that won't be acted upon. Only when there is significant volatility, only then the algorithm will take trade, and that's why we have brought in the ATR. And apart from that, we will be continue to use these AC2. Now it's on hourly time frame. Let's see if it will fulfill our purpose. So we will look for some recent example where we can utilize this. So here you can notice that in today's session, the crossover here changes from being in the bearish territory to in the bullish territory, and at the same time the AC2 should also change from bearish to bullish. So here we have at 9 GMT, the 9 GMT is here, this bar. When it closes, the AC2 is also changing direction, and the price action for last suppose if we are going to use last 3 hours data, then we will be using the minimum value and the maximum value. So last 3 hours minimum value will be somewhere close to 1.111, and the highest value will be 1.117. So this is pretty good, almost 50 pips, and even if the daily ATR is 70 pips, the minimum requirement of the last 3 hours volatility being more than 30% of the daily ATR is going to be fulfilled. So for us, the 21 pips were required, and here more than that volatility is here, so we will be able to take a trade. Now, for further requirement, we can go for a pending order, and since the last candle has closed far away from the last 10 EMA, we can do some subtraction and try to bring in closer to the EMA, as we have done while explaining the AC2 algorithm in prior session. So we will adopt a similar strategy here also. So I hope the idea is clear. So once again, I will explain to you on sale time frame. So when the EMA 10 is less than EMA 20, and the last 3 hours difference between minimum value and the maximum value is more than 30% of the average true range, and also the momentum is shifting from bullish to bearish. So here it is not happening, so I think we will need to look for different time when that has happened. So here I think here also we want the momentum to be shifting as well from bullish to bearish. So here you will get this condition when the crossover is in the bearish territory, and the momentum is also freshly shifting from bullish to bearish. And if we were to consider the last 3 hours volatility, so here this will be the minimum value and this will be the maximum value. So I think the minimum maximum condition won't be fulfilled, so this trade won't happen. Uh, so I think it will be better if we use the AC2 on half an hour, because here what's happening is that we are not exactly getting the entry points using the AC2 on hourly time frame. So I think it will be better if we use the AC2 on half an hourly chart. So we will change, edit the time frame for AC2, and we will bring in half an hour. So here it is. Now, so here the difference will be more than 21 pips as required by our ATR condition, and the freshly momentum will also be shifting from being in the bullish territory, that is AC2 values were in positive territory, now they are freshly shifting to the negative territory, and that will indicate the shift in momentum also. So when it happens, it is 10:30, and here we will be checking for our conditions also, and here we will be getting the confirmation, and the new trade can be placed somewhere close to this bar, and eventually it will also go for a good amount of profit. And similarly here also the momentum, which is in the bearish territory, shifts to bullish territory around 9:30. So 9:30 is this bar, and the ATR condition will also be fulfilled along with the EMA condition. So three requirements will be there, each for different type of indicator. And now let's start to build it on the JForex platform. We will need the EMA blocks, one for EMA, and yes, before that we will also need to do the instrument subscription, and for that we will need to bring in the A blocks, logical, and then we will also need one more A block for making sure there is no open position at the moment. This time we will utilize the Zontic flow, and let us bring in the default instrument. So this is the default instrument, and then we check for on tick, last tick, and the tick instrument, and here we will put in the Euro USD. Euro USD, it's a tough job finding the Euro USD here. Oops. It's taking a lot of effort. Oh no. Mm-hmm. We got it finally. It troubled us a lot. Now the default instrument has also been set at Euro USD, and the last tick instrument should be equal to the default instrument, and that tick instrument should be equal to the Euro USD. So this is our standard instrument subscription. To that we will add a fresh condition that there should not be any position open or pending order. So we bring in the position info, default instrument, trade amount, and the position info, all position amount. It will include both open and the pending, so all position. And now we will connect this. Position amount should be equal to 0, and here the default instrument is Euro USD. Time frame should be 1 hour. Hourly shift is 0. Here time period should be 10. We are going to use the combination of 10 EMA and 20 EMA on the hourly time frame. This is also, this two needs to be changed to 1 hour. Hourly shift will be 0 as it is going to be the current value, and we will put in 20, and we will connect this and the output value which we will need later on. So these are the EMA conditions. Now we need to bring in the ATR, and we will also then need to bring in maybe we can use historical candles. We can use 3 historical candles, or else we can use the minima maxima to do the necessary calculation of the difference between minimum and the maximum, that is the lowest and the highest value for last 3 hours. Now we have got the EMA. We will look for ATR. I think here we will need to look. Okay, we got the ATR now. We will set up the ATR on daily time frame. ATR daily shift will be 1, as we want the ATR to be calculated till yesterday, as today when the day starts, if we use the current value today in the early hours of the day, the ATR value will be low, as there is no volatility, as the day is just getting started, so the range will be less. And to eliminate that effect, we will use the shift 1 here, so it will be the yesterday's value, and the output value will be line 19. Okay, and now we bring in the AC2, which we are going to use on half an hourly time frame indicator, and here we will be getting it in AC2. We will need to use the shift 1, that is 1 period back, and then 2 periods back, 2, Here this is going to be on half an hourly time frame, 30 minutes. And shift will be 1 and the 2. 1 and this 2. So this will be the last candle close and this will be the prior candle. The output values positive and the negative. So far so good. We have brought in all three necessary indicators. Now I think last time we had worked with the min-max. Maybe this time around what we can do, we will try to use historical candles and for that we will need to utilize get historical candles, or we can even simply both ways we can do it. Let's work with historical candles. Then we will need to bring in the loop viewer as well, and then the highest and lowest value. So here the default, we will make it hourly. And we will make it till the shift one, last 3 hours. The value of last 3 hours is all we want, and to that effect, or we can even yes, we can keep it as current value also, and we will reduce this candle amount to only 3, as we want the data to be of only last 3 hours. So the candle amount is reduced to 3 and candle 22. Now to get all the data, we will need to put it in loop viewer and then create a new variable of which we will be using the low and the high values. So I think we will get the loop viewer. We will need to search it. Mathematical, logical info. Oops, it's not available here. Strategy, no. Indicator, Bill Williams. Since it doesn't have a search option, we will need to look in every drop down menu here, and that is sometimes very frustrating. Oh. Maybe we better use the min max condition only. Oh, here it is, loop viewer. I think I overlooked it. Array of data. We bring in this candle 22 here and we then connect it. and we will name it as high low 3 HL3. Okay, so here, so far so good. We are now almost done to put in our if conditions for both sides. We will now need to bring multiple action, and we will connect these two, and we will try to keep it in center, and then we will build it. But before that, now these are the requirements of getting the data. Now we will need to do calculations as well. So we will need to do calculations to determine that the difference between this value is going to be going to be more than the required ATR. The ATR condition has been put in at 30% of the ATR, and we want the volatility to be more than that. So now let's start doing the calculation. And components, we will need to go into the mathematical mode, and here we have the calculation expression. First we will do the calculation for 30% of the ATR value. So here it is. We will bring in the line 19 in A1, and we create a new variable with the name ATR requirement AR, and we put in the value as 0.3. Now when we multiply any ATR value by 0.3, it will become 30% of the ATR's range, and that's why I have written it as 0.3. Now we bring in the 0.3 here, AR, and when we multiply the average true range by 0.3, it will become the 30% of the daily, that is daily average true range. So we do the calculation A1 into A2, and we save the result as minimum ATR requirement. Okay, yes, that's it. Now we will put it here. So the first calculation is done. Now we bring in another to make sure that the highest and the lowest point of last 3 hours is further apart by at least 0.30%. So we will need to utilize these. We will subtract the candle low from the candle high for last 3 hours, and then we will get the difference between high and low value, and then we will compare it to the minimum ATR requirement. So let's bring it here. High low HL3 is candle high, and we bring in the HL3 is candle low. and then we will do the subtraction. A1 minus A2, and we save it as actual hourly difference is T. So it's done. So we have done two calculations. We are going to subtract the candle low from the candle high, and that will give us the difference between highest and the lowest point for last 3 hours. And then we will compare it to the average true range, and if it is more than the 30% of the daily average true range, then only the trade is going to be initialized. And I think that's pretty much the indicator and the calculation requirement we have as of now. So it looks good to me. So let's take a brief recap of what we have done so far. We have done the instrument subscription, then the positive position amount, and then we brought in the EMAs and the ATR and the AC2 and the historical candle with the loop viewer to okay. So let's connect this, and with that our time is also running out, so we will continue the part of adding conditions and building the buy side and the sell side tomorrow. So that's it for the day, and I hope you have got the point. And it has been a fairly simple setup where we will be looking for a buy trade when the EMA crossover is in the bullish territory and the volatility is good enough so that we don't get caught up when there is no volatility, there is no price action, and only the momentum is sideways. And also we want to make sure that we are getting involved in the trade during the first change in the trend, and that's why we are going to use this AC2 condition, the acceleration deceleration oscillator. So with that we will continue to work tomorrow also, and we will build it further. So thank you all for joining in. See you tomorrow. Goodbye.